Today we're going to talk about taxes, and we're going to use a piece of corn to talk about it. My name is Kyle Knott, and I am not your average finance guy. So, what does corn and taxes have to do with anything? So, if you think about this piece of corn right here, if you can see, I'll get up close. Every little kernel on there has the potential to grow an entire ear of corn. All right, I'm from the Midwest, and we are just about to sweet corn season. We're not quite there. This batch isn't that good. It's good that we're finally there, but it's going to be a little bit better here in a couple weeks. But anyway, each little piece of corn on this ear has a potential to grow into this full corn on the ear of corn on the cob, right? So I shucked this one for you, and this is what we've got left. So let's talk about different kind of accounts. Now we've got tax deferred accounts and we've got pre-tax accounts or no tax accounts. So what I would rather do is, but I'm not going to say what I'd rather do. I want to know what you would rather do. So in a pre-tax account, we're going to say that, okay, you got this whole ear of corn and you can take, and I don't know how to read, I'm not a farmer, but dry the seeds, and this probably isn't seed corn. I'm probably doing it wrong, so please don't beat me up. But each one of these kernels on here, you could take and you could plant every single one of them out in your field or your garden, and it has the potential to grow up. Let's say, I don't know, let's say there's 500 on here. So you could have potential to over 500 ears of corn. I've seen some that have 2 ears per stalk. So you've got some really good potential to grow a lot of corn. So in these pre-tax accounts, what you're doing is you get to plant the entire thing, every single seed, but at the end, when you've got all kinds of these sticking up out of the ground, at that point, that's when the government says, okay, now it's time to pay your tax because you didn't pay any tax on the seed, you pay it on the harvest. So I should just break one of these off here and talk about this better. So I don't know if you can see that, but all right, here's the seed. So you didn't pay any tax on the seeds that you planted, you paid it on the harvest. So now it's time to harvest. We went through in corn years, it's just a year, but in retirement, it's going to be multiple decades. So once you get to retirement age, now in a tax deferred account, you want to start taking some corn out, some money out, right? So in doing that, now the government says, okay, now you have to give us some. And the way the tax system is set up right now is there's defined tax brackets, and depends on how much you take out. If you want to take out a huge chunk of it, you have to pay income tax on that chunk. So if you just want to take a little bit out, you only have to pay tax on that little bit. So we don't know where the tax brackets are going to be in the future at all. We don't know where they're going to be in the next presidency or the next administration. Everything keeps changing all over the place. So everything is very volatile. Would you rather do that, or would you rather go into a tax the seed, not the harvest? So stuff like accounts like that is like maybe a Roth IRA or the infinite banking concept. So with that, you've already taken the tax. So with a good analogy with this is, okay, here's what you've made at work. Okay, now if you want to trim the top of this off and give that to the tax man, so then you get to plant the rest of this. And if it's in a Roth IRA or the infinite banking concept, you can plant every single other seed on here, and those can grow and they can pop up. And from there on, you can plant every single seed. And the next year, each seed grows up another, all kinds of, and you can plant another 5,000 or whatever, and it keeps growing. And that's literally compounding right there, uninterrupted compounding. You can do that inside of a post-tax account. So you've already paid the taxes. The first ear of corn, we chopped that top off and we gave that to the tax man, and that's all the tax man gets. That's all they get. And the rest of this, for however long, imagine if there's another 450 seeds on here that you could plant, and that shows up to another 500 ears of corn times. So now you got 500 times 500, and then it's whatever that number is, 25,000 times 500 again. So now it just keeps building and building and building. And from that, you already paid. This is all you paid. That tax, that's it. That's it. That's all you paid. The rest of it can keep growing and growing on for as long as you keep it invested. So, and with those kind of accounts too, you don't have to start taking your money out. When you do a regular traditional 401k IRA type of deal, when you put your money in, they say once you reach a certain age, and I'm nowhere close to it, I don't really have much in those accounts, I don't know, but at some point you have to start taking money out of it. So since those are growing tax free, a lot of people like, I'm going to leave it in there. I'm going to leave it in there and let that grow, and I'm going to live off my Social Security. I've got these other things and other stuff going on. But the government says, no, you haven't paid taxes on this yet. We need our tax. So you need to start taking that out of that account so we can get our tax money. Where on the other one's like, well, you've already paid the tax, so we don't really care what you do. You leave it in there for as long as you want, and we can't really get any tax from you, so I don't care, whatever. So with the Roth IRA and the IBC, they don't really care, okay? Because you've already paid just that little bit of tax. Now, what do you think if you keep paying that little bit of tax, and next year, I mean, it's just going to grow and it's going to explode, right? That's just from one ear of corn. What if you throw another ear of corn at this every year and you pay a little bit of tax, a little bit of tax? I mean, you're going to have so much corn in 30 years that it's going to be crazy. You'll never be able to eat it all. You can pass it on. You can do great things. You'll have so many more choices and opportunities and things that you can do. So with that, or it's not bad if you want to plant this whole thing and let it grow. I mean, you're still going to have a lot of corn, but then at the end, they're going to take this much off of every single ear that you have. So if you've got 10,000 ears, they're taking this times 10,000, where these other accounts, they take this once and that's it. Now, granted, it's that much that you don't get to plant, and I get that. So that's why early on in your career, you people that are just entering the workforce, younger people, you're not making that much money, pay that tax because it's not that much, and get as much of those post-tax seeds as you can planted early and get them going, okay? If you want to look into any of these accounts, got any questions about anything, go ahead and text Kyle. Shoot me a comment down below. Please don't call me out on my farming skills here. I like to eat corn. I'm not very good, not very much of a green thumb. So got any questions, please let me know. I would love to help you out, and good luck, everybody.